Despite the kind of change we're seeing in Nigeria at the SSC, within the banking sector as a whole, the political environment as well, Uduakobong, there's still so many question marks about where, it's complete resolution that seems to be lacking. With that, are you surprised by the kind of lackluster movement we're seeing on the local bourse?
Yeah, good morning, Alicia. The lackluster performance of the markets, there are a couple of factors like you have rightly highlighted. There's been a move into a couple of investors have decided to move into cash. They've actually been watching and observing the political arena to see what plays out there, and the banking sector has come up with a number of policies, and we've actually seen people move down on the banking stocks, and that's what has actually driven the performance in the market. Yes, I would say the performance, I would say it's been over the movement, the negative movement has been excessive. I don't think the market should be trading where it is. I think there's still value stocks in the market, and they are at very attractive prices, which you can actually pick up.
Let's take a look at a few of these players. I mean, Guaranty Trust Bank, the bank to come out with big news on Friday saying that it will be divesting from its non-banking units, and pretty quick in terms of response to the central bank's directive.
Yes. Guaranty Trust Bank has always, been seen as a bank which always moves ahead of its peers. But definitely, it's something that's been in the pipeline. The central bank even had given indications that such a policy was going to come on stream, very soon, and so they had, started talking to themselves, I guess, met at the executive management level and, made such decisions. And so I guess their reaction almost immediately after the CBN's announcement, was expected, because they've actually gotten maybe a clear-cut direction on where they want to go, in the next 1 year.
Well, certainly change is not going to be happening overnight. So how are you playing within this space at the moment? Are you scouting out for the opportunity, or are you holding out until concrete detail emerges, whether it be with regards to AMCON or M&A activity?
I guess for most investors, right now, a lot of people are actually playing by the sidelines, and watching to see on what actually happens and how all the policies actually unfold in the practicals. I would most likely be looking, at stocks, and at companies, and where there's a clear-cut direction, where the company's management, is shown what it wants to do and how it's going to achieve it, and how these policies would, definitely favor them. I guess for the universal, for the movement from the universal banking, regime, to the mono line or to the holding company structure, it will actually pay out banks, which already have, if you're moving into a monoline, you would actually, it would be favorable if your subsidiaries will not account for a huge portion. And so if you know that the subsidiaries are not accounting for a huge portion of the bank's earnings currently, then it will be wise, at current prices, and attractive valuations, to get into such premium stocks.
If we get specific here, let's look at a stock pick for you that represents value within the banking arena right now.
I think a stock that comes up in mind, the GT Bank, which you just mentioned, is trading at barely over 14 naira. It's lost, significant value, and if you even look at its subsidiaries, what its subsidiaries currently contribute to its earnings are actually less than 10%. And so even when they're actually able to sell down on the subsidiaries, we don't expect a radical movement, it's in its earnings patterns. We don't expect a radical, drop, in its earnings patterns. And so at current prices and an attractive valuations, I think it's a player to hold.
In the meantime, quite a few of the oil players have been stealing some attention as well, with all the numbers that have been released within that sector. We had fuel retailer Conoil saying that its pre-tax profit has risen 15%. What's your view on Conoil on the back of those numbers, but more especially on the back of the company's outlook moving forward?
I think for Conoil, yes, there was a growth in earnings on a year-on-year basis, but it will also be worthy to note that if you look at the company's performance between Q3 and Q4, there was actually a drop. We know that most players had challenges in the fourth quarter, and so we know that definitely will have affected Conoil's performance in Q4. But also interesting to note, it's actually the dip in PAT. So I guess because Q3 accounts were actually unaudited, and the full year accounts were audited, so it's most likely the auditors had some provisions, and we know that's a company whose financials have actually been delayed. Prior to the NSE sanctions, it's a company whose results were expected. Q1 earnings are still being expected. Q2 earnings are still being expected to come in. And but in the last 6 months to 1 year, we've seen the company do and move into investing in expanding its network, even in the downstream space. I currently would say that we'll be holding the stock, we'll be neutral on it, because we want to see, we'll most likely want to see how it plays out, in the first 2 quarters of the year.
Of course, pace of growth being further highlighted by MRS's results or trading expectations, saying that it expects PBT to reach $16 million in 2010, representing a 42% increase from the previous year, and certainly increasing the pace at which it's closing the gap in terms of profits between itself and a player like Conoil.
Definitely the huge growth, or huge expected growth for MRS, I don't think it's out of this world. I think it would be worthy to note that the company is coming off a low base, and where in the previous financial year its downstream business was significantly affected. So seeing a 40% growth is not actually outrageous. But yes, it's been, it was taken over, and a new management is actually in place. So it's actually in the pipeline to actually improve their margins, and the petroleum sector, the petroleum marketing sector has actually been favored in the current year, and because of the sovereign debt note program of the federal government, which ensures that they get subsidies as at when due and on cost. And so margins have witnessed slight increases, and that should also play out for MRS.
Let's pick up on that subsidies note, because it's still a major consideration for these players. If subsidies fall away, what do you see that doing to demand and future earnings?
For demand for the stocks, yes, for future earnings, the margins actually should improve. But we know traditionally it's a low margin industry. The margins are probably between 3% and 4%, and then for players which have other contributors to income, to their income earnings, you would see margins of between 6% and 7%. So generally, we would see an improvement in margins. The working capital requirements for these companies have actually reduced, and their financing cost has also reduced. So we would just see a maybe 50 basis points increase across the board, for the players.
Of course, these are indigenous players that are set to reap some of the benefits of the petroleum industry bill coming to the fore as well. Now, this is a further area where there's unresolved issues, and the market is still left contemplating. Any detail that's emerged on that front? Any developments that's come to the fore?
I think they're actually quite different. Specifically, these are downstream players, and right now what they are actually benefiting from is actually the sovereign debt note program. But as for the petroleum industry bill, I guess the considerations will be best, for the upstream players, who are going to, as indigenous players, they'll be able to tap into the benefits.
The likes of an Oando.
Yeah, the likes of Oando, who will be able to tap into the benefits of getting marginal field allocations, the likes who will be favorably disposed, to partner with some of the big majors, just to boost their indigenous contributions in the local, as also in furtherance of the local content policy. So those are players who would be favored. The indigenous players, right now, we just have one which is listed and who has upstream operations, and we have a couple of others, who are actually playing, who are private players now and not listed on the Nigerian bourse. And so it's actually going to play out well for them when it is passed. And currently, not much has been said. The federal government about a month ago had said they were looking to pass the bill before October. The Senate has not really sat on it in recent times, and we'll just want to watch out and see how that plays out.
Okay, well, let's just get a quick update on African Petroleum, because this was a counter whose movements was being questioned last week. Any reasons that have emerged in terms of why we saw the kind of ramp up we saw on that share price last week?
Specifically, we would note that African Petroleum was severely beaten, on the back of negative information which came out about 4 or 5 weeks ago. And on that news, there was a serious sell down on the stock. It lost significant value. I guess some investors, just decided to come into the stock knowing that there just might be some value, though the disclosure level for its full year results are yet to come out. Its Q1 and Q2 results are also yet, to hit the market. But I guess some investors decided to go in and believing that there still might be value in the stock.